Could buying something just for the tax write-off actually cost you more in the long run? Let's break it down. Welcome. Every day, I break down personal finance questions asked on Stack Exchange, highlight the community's best answers, and sprinkle in some actionable takeaways. If you're into learning a little more about money each day, make sure to subscribe to the channel. Now let's dig into today's question. Today we're exploring a common question. Is buying something just for a tax write-off really nonsense? Here's the original question as it was posted to Stack Exchange. I'm going to scroll through it quickly so you can see the whole question, but feel free to pause the video if you want more time to read it. Don't worry. After this, I'll walk you through the key points of the question so you get the big picture. So, in summary, someone is curious about how movies and TV shows often depict tax brackets and deductions. They notice characters avoiding higher tax brackets or buying things just for the tax write-off. This makes them wonder if these portrayals are financially accurate, questioning if deductions really motivate spending or are just like getting a discount. Here's the top-rated answer from the community on Stack Exchange. I'll scroll through it quickly so you can see the full answer. Feel free to pause the video if you want more time to read it. Don't worry, I'll highlight the key points of this answer in just a few moments. In this answer, it's highlighted that tax deductions don't always guarantee savings, so doing the math is essential. Tax brackets play a role, as lower brackets might boost credits, making strategic spending worthwhile. While business expenses can cut tax burdens, evaluating if a write-off truly saves money is crucial. Now, before we jump into the next part, if this video has been helpful so far, be sure to tap the like button and subscribe to the channel. We post new personal finance videos every day to help you make smarter money moves. Here's another answer that was shared in the Stack Exchange thread. Like before, I'm going to scroll through it quickly, so feel free to pause the video if you want to read it yourself. Otherwise, I'll highlight the main points of this answer in just a few seconds. One response points out that the fear of losing welfare benefits can discourage people from earning more. Sometimes, extra income can result in losing existing benefits. The impact of these welfare cliffs or poverty traps is a debated political issue. Here's one last answer from original post on Stack Exchange. I'll quickly scroll through the answer so you can read it. Feel free to pause the video if you need more time. And just like before, I'll be highlighting the main points of this answer for you in just a few seconds. In one response, it's noted that buying an asset for a tax write-off can lower tax liability beyond the asset's cost. Tax incentives often encourage investments in certain areas, like electric vehicles, which can provide deductions for business use, though benefits vary with usage and tax rates. Alright, now that we've seen what the community had to say, here's our take on this question. Buying something just for a tax deduction isn't really saving money. If you spend $1,000 and only save $250 on taxes, you're still out $750. Tax deductions lower what you owe but don't give you free cash. Think of them like a discount. Donating $1,000 might save some taxes, but it doesn't cover the full cost. So here's what we've learned. Tax deductions reduce taxable income, acting more like discounts than reasons to spend. While buying just for a deduction often isn't wise, strategic planning around deductions can lead to smart financial benefits. Thanks for watching. Before you go, did you learn something new from this video? If so, be sure to drop a like on the video to let us know.